Tax and Super by Gurnaz and Sehaj.
What is tax? Tax is the money the government collects to pay for services we all use, like hospitals, schools, roads, and defense. There are different types of taxes, including income tax, GST, Medicare levy, and capital gains tax.
Income tax. Income tax is a tax we pay on money we earn from work, business, or investments. Individuals pay on a progressive scale starting with a tax-free threshold. Companies usually pay a flat 30% or 25% if they're a smaller base rate entity. Trusts distribute income to beneficiaries and pay tax at their rates. Partnerships share profits among partners and each pays individually. Not-for-profits get special concessions or exemptions.
Capital gains tax is a tax on profit from selling assets. For real estate, you pay CGT on investments, properties, but usually not your home. For shares, profits are taxed and losses can reduce your tax. Crypto is treated like shares unless it's for personal use.
GST. GST is a 10% tax on most goods and services in Australia. Businesses collect it from customers and pass it on to the ATO. Depending on how big the business is, they report GST monthly, quarterly, or yearly.
Superannuation or super is our retirement savings system. Employers pay 11% of your wage into super. There are different types of funds like retail, industry, corporate funds, or self managed super funds. You can also do sacrifice. That means putting extra pre tax income into super. Up to $30,000 contribution in super are usually taxed at 15%, which is lower than normal income.
TFN tax file number. A TFN is a unique 9-digit number you need for working, opening bank accounts, and lodging tax returns. Without it, you might be taxed at a much higher rate. The TFN also doesn't expire.
The Medicare levy is 2% of your taxable income. It helps fund our public healthcare system. If you're a foreign resident on a temporary visa without Medicare access, you don't pay it. There is also a Medicare surcharge. If you're a high income earner and don't have private health insurance, you pay an extra 1% to 1.5%.
Extra rules regarding tax. Tax residency, the 183-day rule. You're considered a tax resident if you live in Australia. The main rule is that you stay here for more than 183 days in a financial year, or you're a resident for tax purposes. Residents pay a tax on worldwide income, while non-residents only pay tax on Australian income.
Foreign income. If you're an Australian resident for tax purposes, you must declare your worldwide income. That includes wages, investments, pensions, or interest. To avoid double taxation, Australia gives foreign offsets.
How taxpayers help the country grow. Finally, every taxpayer plays a part in helping Australia grow. Tax funds hospitals, schools, roads, and welfare. They also support renewable energy, technology, and research. So paying tax means we're all contributing to a strong economy, fair society.
Thank
Thank
you
you
for
for
listening.
listening.